Welcome to our show. Today, we are going to answer the big question that we're hearing a lot of. Should I buy gold? The market's going up and down. Do I need gold in my portfolio when I'm retired? Now, this is a big question. It's got a lot of moving parts. So, we're going to use a 4-part process to answer the question, should you buy some gold? Part one, we're going to talk about the facts, things that are going on, what gold means, how you own it, how much it costs. Part two, what's the industry's opinion? Custodians, mutual funds, warehouses, big box shops. What do they think and how do they feel about you owning gold? Part three is the fun one. What are their real motives when it comes to you owning gold? Are they for it or are they against it? And the fourth one is my personal favorite. I'm going to talk about my opinion. Greg's opinion, should you own gold in your portfolio in retirement? Now, before I get started, my name is Greg Aler. I'm CEO of Golden Reserve and CEO of Aler Stallings Law Firm. We have a national TV and radio show, and I have sat down with thousands of retirees out there to answer those big questions. So to get started, let's start with part one, the facts. Gold is a commodity, no different than silver, copper, steel, platinum. And frankly, it was the primary currency back in the day before dollar bills, right? That went on for hundreds of years. It's how we transferred wealth. And there is some psychology behind it, right? There's prestige, there's wealth. I mean, it's in our jewelry. Gold has a certain reverence. Now, this question comes up often when the stock market starts to struggle. We see videos, we see commercials. Heck, we see it in the line at Costco. So if you're thinking, should I buy gold? Should this be part of my retirement portfolio? Before we tackle that big question, let's quickly talk about, how do you own gold? What are the ways out there in which you can actually purchase gold as part of our facts section of today's video? There are 3 ways to think about owning gold. Well, the first option is also the easiest option, which is buying a gold ETF. Now, these are things like GLD and GDX are some of the world's largest gold ETFs that you can access. So that's obviously option 1. Very easy. You can log in, make it happen. The next option is actually buying gold, believe it or not. Gold bullion. You can buy coins or you can buy bars. They usually sell them by the ounce. Coins are an ounce. They're usually about 3,000 a coin. You can get 10-ounce bars that are roughly 30,000, or you can get 1 kilogram bars that are roughly 100,000. So now we just wrapped up part one, the facts when it comes to gold ownership. Part two is going to talk about the industry opinions. And when I say industry, I'm talking about wirehouses, big box shops, custodians, mutual fund stores. These are the people that control the narrative for the financial industry. UBS, Merrill, Morgan, Eddy, Fisher, Vanguard, Schwab, all of these big companies. And the overarching opinion when it comes to the industry, by and large, they're bearish on all commodities, right? They don't get their hands into the commodity market. And we'll talk about why that is. But for the most part, for retail consumers, they shy away. You don't hear a lot of these financial advisors out there recommending big commodity purchases as opposed to sticking with your traditional equity and bond portfolios. Now, the people that are bullish when it comes to obviously gold sales are gold brokers. Right? Let's be honest here. These are the people that you see on television, the commercials. You see them in Costco. Rumor has it that Costco is selling $100 to $200 million a month in gold while you're waiting in line at Costco. That is unbelievable. They are turning into one of the world's largest gold retailers. You really can't make this up. But if you want to buy gold, you have to find someone that will sell it to you. And these are precious metal brokers. So just to quickly recap here, part two, the traditional financial industry, I don't believe, are a big fan of gold as part of a retirement portfolio. Whereas the people that are selling gold, the gold wholesalers, the precious metal folks that you see selling it, are of course big fans always of you owning gold because they sell it. Now, that puts us into the fun part 3, which are, what are the industry's motives? What's going out there? Why do they have these opinions when it comes to gold? Well, the financial industry, what we just talked about, has really shifted away from traditional A-share mutual funds and more to 1% fees. So as you can imagine, if they can't charge 1% for an asset that they're managing, they're probably going to hate it. They're probably not going to recommend it. And if it makes sense, they still probably aren't going to recommend it because they can't get paid. Now, I know that sounds terrible, but think about it. If you can't get paid for something, are you going to say, take this money out of my ecosystem and put it into the gold ecosystem? They may still use things like ETFs to satisfy that thirst for certain retirees, but it's not their favorite thing to do. Now, I will tell you some of the challenges with that ETF model if that's what the industry is trying to push, is it does carry a lot of times almost a 0.4 to 0.5% fee. That means almost a 0.5% is going to expenses and cost to manage that commodity ETF portfolio. So to put that in English, if you're starting a race and you're trying to make money 1%, 3%, 5%, 7%, you're starting a 0.5% behind the starting line before each year starts. That's an expensive way to start your year. So be careful when it comes to ETFs for commodities. They are expensive. As for the wholesaling of gold, guys, they aren't talking to you about your retirement goals. They're not talking to you about your income plans. They're not talking about what you're trying to do with retirement. They're just selling gold. My concern is they're not talking about retirement in a way that is holistic, that's talking about all your issues. They're just selling stuff. This is never a great place to be for retirees, and they're preying on our adoration for gold. And they're saying, hey, the stock market's getting rocky. Put your money in gold. That's where it's safe. That's the where it should be. And it'll be all right because it's nice and shiny and pretty. When it comes to part 3, hopefully those give you some at least inside baseball ideas on why the industry has one opinion and the wholesaling gold market has another, which leads us to part 4, my favorite section, Greg's opinion, right? This is where I'm going to break down what I think the answer should be when it comes to having gold in your portfolio in retirement. Now, if we look back from 1848 to 1855, this was the infamous gold rush in California, where almost everybody that went out there lost. No one talks about that. The mining rights, all of these things, they almost all failed. And that's really how I feel about commodity speculation for the average retiree. Understanding commodity markets, trends, it's complex, it's dangerous, there's huge swings. If you don't believe me, let's just take a history lesson. Let's look at this chart. This is the performance of gold from 1980 to 2025. Now, the telling part of this graph, if you follow this line across, that if you invested in gold in 1980, fast forward 30 years, your gold did not appreciate 1 penny. As a matter of fact, it decreased by almost over 75% during the 80s, working its way just back to even in 2010. Fast forward another 10 years, and we're still at even. So from 1980 to 2020, you have had 0% growth in the gold market. This shows you the highly speculative and the highly volatile nature of commodities in our present age. To take this a step further, the chart you will see on any website trying to sell gold, let me show you, not coincidentally, is showing a time frame from 2015 to 2025. Not so ironically, if you look at this, it's going up. They want you to get excited about gold nowadays, but this is such a short period. Is your retirement 10 years? No, it's 30. You should look and see what the total performance of gold is over a large period of time. And even in this chart, if I draw a line across again from 2020 to 2024, gold is flat during the same period when the stock market was going in double digits every year. My goal of showing these charts is to illustrate that gold is not a safe and consistent return. It's volatile, it's up and down, it's drastic. And I don't think that's how most retirees think about their retirement. So I think you can see where I'm leaning here. Volatility plus illiquidity equals a hard pass for me when retirees ask, should I buy gold in retirement? Now, if you're adamant and a true believer, just buy a single coin. Then wait 1 month and try to sell it. That way you understand the process. There's spreads, there's illiquidity, there's challenges and realities in owning commodities before putting any meaningful amount of your retirement into something like gold. It is a huge commitment. So what am I saying? I'm saying I would pass on gold and stay the course and do the boring stuff. Money markets, bonds, annuities are safe places and bets for your retirement dollars. Don't keep betting and gambling because you feel you have to keep winning just because the stock market's going down a little bit. This is your life savings, not poker chips on a casino floor. It's not a time to explore and get creative. It's time to get boring, stay safe, and ensure you go on every trip you want in retirement. And if you are in the Costco line with a 3-gallon tub of mayonnaise and a couple years worth of pickles, and you see the shiny signs and the coins, just keep walking. And if you do pause, to the allure of the shininess. Ask yourself, do I really want to make an investment decision that affects my life savings at the same place I buy my pickles and mayo? I'm Greg Aler, and my mission remains protecting retirees like my mom and dad from a trillion-dollar industry who is more concerned about their bottom line than the retirees they're supposed to be protecting. And if you like this video, folks, do me a favor, tap that subscribe button, tap that like button, and leave a comment below. Thanks so much, and we'll see you next week.